Hello, welcome in this video. This video is about the mitigations. What is a mitigation? When price taps into a supply or demand zone that has not been tapped yet, it becomes mitigated from unmitigated. What does it mean? If you have a supply or demand zone, there are loads of orders sitting on those zones placed by algorithms, banks, and retail traders. When price taps the zones, the resting orders are getting picked up, so it's becoming mitigated from unmitigated. A zone can be only mitigated once because orders can be picked up twice, but a price can form another zone inside of the old one. But okay, that's enough of theories. We don't really want to overcomplicate things. Forex trading is hard enough, so let's keep the theories and analysis simple. Okay, let's see an example for the mitigations. Price is moving in an uptrend, so it's creating series of higher highs and higher lows. If price moves in an uptrend, we are expecting the demand taps. Let's say this demand zone was created because it created inefficient move to the upside, broke structure, and swept or created some liquidity. So this demand zone will stay unmitigated unless price taps into this zone and collects all of the orders that are resting on this zone. If price steps into this zone, it will become mitigated. Okay, let's say price stepped into this zone, mitigated the orders, collected the orders, and after the mitigation, price created another break of structure to the upside, inefficient move, created or swept some liquidity. In this case, price will create another demand zone that will stay unmitigated unless price taps into this zone. If price taps into this zone, it will become mitigated again. This is how mitigations work. This is a demand chain. Okay, let's see a live chart example for the mitigations. As you can see, price is currently moving in a downtrend, creating series of lower lows and lower highs. So if price is moving in a downtrend, we are expecting the supplies to be formed and the supplies to be mitigated. So if we see a downtrend, we will see supply zones and we will see the mitigation of these supply zones. So if price taps an unmitigated supply zone, it will become mitigated. So all of the orders were collected. Let's see the live example, and I will just play price forward. As you can see, price created inefficient movement to the downside. It broke structure here. So we will have a right supply zone, which is this one, because this candle created the inefficient movement and the break of structure. So right now, this zone is unmitigated unless price taps into this and mitigates the zone, so collects all of the orders. Let's see what happens. As you can see, price tapped this zone, so it became mitigated. Let's play price. As you can see, price broke structure to the downside again here and created inefficient movement, and the inefficient movement was created by this wick right here. Okay, we are expecting the tap of this supply zone now. Price tapped this supply zone, mitigated it, collected the orders. So right now we are expecting another break of structure to the downside. As you can see, another break of structure happened here. Another inefficient movement happened, and the inefficient movement was caused by this candle. Actually, we could use the upside candle before the inefficient movement, but this is a refinement. We'll talk about refinements in the later units. And the inefficiency was caused by this candle, and the break of structure was caused by this candle too. So this will be the right supply zone. This supply zone will stay unmitigated unless price comes back up and taps into this zone, so it will collect the orders and it will become mitigated from unmitigated. Okay, let's see what happens. As you can see, price mitigated the zone again, collected the orders, so this became mitigated. And this will go on and on and on. This is a supply chain, and this is a mitigation. So let's see another example. As I said earlier, a zone can be only mitigated once because orders can be picked up twice, but price can form another zone inside of the old one. So I brought an example for this one. So as you can see, price is moving in an uptrend, creating inefficient movements to the upside and breaking structures. So this means we will have a right valid demand zone. Price came back down to mitigate this zone, collected the orders, and after the order collection, it created a change of character to the upside. So we will talk about change of characters later, but as I said earlier, if a change of character happens, price will automatically create a new zone. So this could seem like price created a zone and it mitigated that zone twice. And after the second mitigation, price blew up to the upside. But it didn't really happen because price created a new zone inside of the old one. Because price mitigated the old zone, and after the mitigation, it created a change of character. So it immediately created another zone. So this another zone, this new zone, will be inside of the old, bigger zone. So this seems like it's a second mitigation, but it's not a second mitigation, it's a new zone mitigation. Okay, so let's see an example for that. How can we use the unmitigated and mitigated zones for our advantage? So as you can see, price is extremely bullish, creating series of higher highs and higher lows. And price created this demand zone right here. This demand zone is valid because it broke structure to the upside, so it broke to the last structural point, created inefficient move, but it left unmitigated because price didn't come back down to mitigate and collect the orders. So we will have this zone as our turning point, and we are expecting some reaction on this zone. And after the tap of this zone and the mitigation, we will expect the reversal point, so change of character to the upside, and the continuation of the longs. Okay, price reached its high point here, and after the high point has been reached, price broke structure, change character to the downside. So as I said, change of characters will always create a zone. So this supply zone has been created, but it left unmitigated also, because price didn't come back up to mitigate this one. We will use this supply zone for our target point later. Okay, as I said, we are expecting the tap of this demand zone, mitigation of this demand zone, and reversal on this zone. Let's say price comes back down to this zone, mitigates it, and after a mitigation, it creates a change of character to the upside. And as I said, change of characters will always create a zone. So we have a change of character here. And don't worry, we will talk about the change of characters in the entry units. So we have a change of character, and we created another demand zone because a change of character will always create a demand zone or a supply zone. So as I said, we are expecting the continuation of the bullish trend. So price mitigated this big demand zone. And after the mitigation, it created a change of character, reaction on the freshly created demand zone. And after this, we can use the unmitigated supply zone. So this one for our target point.